Hey guys, welcome to the Management Accounting Mastery Program by Genius App. And in this video, we're going to be doing a cost and cost behavior practice exercise. So we're going to do a practice exercise on cost behavior, cost classification, and then combine both in a short scenario. So I really want you to attempt each and every question before I explain the solution. So we're going to be using an example company, which is a furniture company. So that's why you see furniture, table and chairs here on the side, because we're going to be working with the assumption that we're dealing with a furniture company that produces furniture such as table, chairs, wardrobes, and all those kind of things. So the first exercise is on cost behavior. So what I want you to do is I want you to pause this video and attempt the question, and then after we're going to work through it together. So I'm going to give you an opportunity to pause now, and you're going to continue the video once you've attempted the question. Welcome back. So hopefully you'd have completed the exercise by now, and we're going to basically be doing it together. So the question says you must classify each cost as a fixed, variable, step fixed, or mixed cost, right? So we need to classify whether each of these costs below are fixed, variable, step fixed, or mixed. Remember, our main assumption is we're dealing with a company that produces furniture, right? It produces tables and chairs and wardrobes and all those kind of things. So we really need to think of it in that context in order for us to be able to classify whether a cost is fixed, variable, step fixed, or mixed. So let's start with the first one. We have wood used per desk. So the wood used per desk is, you would have guessed, a variable cost. And I'm saying it's a variable cost because wood is more of like direct material. If you produce more tables, it means that you need more wood, and then the cost will be directly proportional to how much you produce. If you don't produce any tables, any furniture, you're not gonna need the wood, therefore the cost is gonna be zero. So you have a situation here that direct material, in this case, which is wood, is going to be increased in direct proportion to the number of units that you produce. Therefore, it's a variable cost. So it's going to be variable. As activity increases, the cost will also increase, starting from zero here. So it's variable cost. And then we have the second one, which is factory rent. So factory rent, thinking of a certain furniture company, we can say factory rent is fixed because it really doesn't matter how much we produce or how many units we produce. We're still going to pay a fixed rent each and every month. If it's 50,000 a month, we're going to pay 50,000 a month. So this is going to be a fixed cost. And then we have electricity, which has a fixed charge, and the usage so let's just go back. I just want to go back to this one. If you remember, if you haven't watched the two lessons before this, whereby I basically explain cost behavior, the different types of cost behaviors, I really want you to go back to the previous lesson and watch it, because it breaks down even from a graph perspective how it will look. So with the electricity, we're saying there's a fixed charge, meaning that each and every month there's a specific amount of money that you have to pay regardless of whether you produced something or not. So that fixed component is more of like the fixed element of the cost. However, we also need to pay based on usage. For example, if we use more electricity, we need to pay more. So in this case, you have a cost which is a blend of the two. It has a fixed component and it has a variable component. So this is a fixed component, this is the variable component. Therefore, if we have a cost like this, which is made up of a fixed component and a variable component, this is a mixed cost. Mixed cost. And then we have number 4, which is a supervisor salary. So supervisor salary, most of the times it's fixed, because we're saying that the supervisor is not directly involved in the production of the tables, the chairs, the furniture, but he supervises the entire team. So most of the times they'll get paid like a fixed amount. Let's say they're getting paid 15,000 a month, and then they're just overseeing the entire company or the entire factory. So therefore, this is going to be a fixed cost as well. And then we have hiring a second supervisor after 2000 tasks. So this one is interesting because in number 5 we're saying that we have a situation like this. We have a situation like this, whereby here it's activity or the number of tasks that are being produced, and then we have the total cost here. And we're saying, let's say an assumption example, one supervisor is paid 10,000. So this is one supervisor getting paid 10,000. However, once we reach 2,000 tasks, if we produce anything below 2,000 tasks, we still pay 10,000 fixed to that one supervisor. Like I said here in number 4, that the supervisor's salary is usually fixed because they get paid a fixed amount each and every month. However, if the scenario is after 2,000 tasks, we need to get a new supervisor because now it means that the workforce is going to be larger and we'll need a second supervisor to supervise the additional people, right? Because the employees, the factory workers are now a lot. Therefore, we have a situation that we'll hire a second supervisor, which will also be paid 10,000, meaning that now we have a jump in the supervisor cost from 10,000 to 20,000 because now we have 2 supervisors as long as we go above 2,000 tasks. So that's like a step fixed cost because it's fixed only for a certain range. However, if it goes out of that range, therefore it jumps to a new level, a new fixed level, right? So this is going to be the last one is going to be a step fixed. So these are your answers. You have variable, you have fixed, you have mixed, you have fixed, and then you have step fixed. So you can mark for yourself. If there's any question, anything that's unclear, you can make sure that you leave it in the comments section. And let's go to exercise number 2. So I really want you to pause here and make sure that you attempt the question before you continue the video. So I'll give you a chance to pause. Okay, welcome back. Now we can basically do the video together, or we can do the lesson together rather. So they're saying mini exercise 2 is cost classification. So what we should do is we should classify each of these costs as either direct material, direct labor, or manufacturing overhead. One thing I have to say is with this 3 costs that we have here, this 3 costs that we have here. We have direct material, direct labor, and then manufacturing overheads. These are what we call product cost. These are the costs that make up a product. And I'm going to say this as well. If you haven't watched the first lesson on introduction to cost, you wouldn't understand this. So I'll really implore you to pause this video and go watch the first lesson on the intro to cost, so that you can understand that direct material, direct labor, and manufacturing overheads, they make up the product cost, right? Because they are cost incurred directly in the production process. And then you have period cost, which are costs that are not incurred directly in the production process, right? They're not factory cost. However, they're costs that are outside of the factory, meaning that we without this cost, we can still produce, we can still get the final product because these period costs are not directly related to the production or the factory, right? So let's start. Wood used in desk. So this one, wood, we really need wood to produce the furniture. This is directly involved in the production process. Therefore, this is direct material. And I'm saying it's direct material because we can trace it directly to the final product. We can see the wood in the final product. Therefore, this is going to be direct material. The carpenter's wages. Carpenter's wages, these are people that are directly involved in the production of the tables, right? They produce the table, they shape the table, they make the tables. Therefore, this is direct labor, right? Because we can basically say these people are directly involved. They hands-on in the production of the tables, the chairs, and whatever. So this is direct labor. And then with factory electricity. Factory electricity still forms part of the product cost because it's involved in the production process, or it's a factory cost. However, it is not direct material or direct labor because we can't directly trace it to the product, right? We can't say this specific one product consumed this much electricity. However, we said a cost that's a factory cost, but it's not direct material and it's not direct labor. it is a manufacturing overhead because we can't directly trace it to the product, or it's not physically traceable to the product. Therefore, it's manufacturing overhead. So this is manufacturing overhead. And then office rent, this office rent, it's not related to the factory. This is not factory rent, it's office rent, meaning that we can still, this is not involved directly in the production process of the furniture, the chairs, and all those kind of things, right? It's just rent we pay for the office, for the admin team, and all those kind of things. So they're not directly involved in the production process of the thing. So this one we can say it's a period cost. And we're saying it's a period cost because it's not a factory rent, it's office rent, meaning that it's more on the admin building and stuff like that, and not involved in the production process. So it's not a cost that's a factory cost. And then we have sales commission. Sales commission, same thing, period cost. And we're saying it's period cost because it's not a cost that's incurred in the production process. Key, right? It's not a cost that's involved in the production process or incurred in the production process. This is a cost to sell the products after they've already been done, after they've already been produced. Therefore, it's a period cost. And then we have factory manager salary, very key. Factory manager. This is someone who's involved in the production process because they're employed by the factory, right? However, this is not direct labor because the factory manager doesn't physically produce the tables. He's just managing the factory, right? Therefore, this will fall under a manufacturing overhead. Why? Because it is not direct labor. It is indirect labor, but that's still involved in the production process. Therefore, it's indirect labor that's still a factory cost. Therefore, it's manufacturing overhead. So I hope you got that right. Just mark for yourself, give yourself a total. And we're going to go, so these are the answers, you can just review them. But we're going to go to mini exercise number 3. And I'm going to ask you to pause and do it pretty quickly. And then let's jump straight into it together. So welcome back. I hope you answered the question. If you haven't, make sure you pause and answer it. However, we're going to be doing it together. So here, this is an MCQ test, which basically says fixed costs are, option number 1, constant per unit, right? So this is not true, right? Because fixed cost, in total, they constant, but per unit, they keep on decreasing. I'm going to explain it right now. Let's just go to the second one. And then we're gonna see which one is more relevant, which one is more correct. So for now, I'll say, okay, cool, this one is wrong, and I'm gonna explain why now. The second one is say it's constant in total within a range, right? And I'll say this one is correct. I'll say this one is correct. And the reason why I'm saying it's correct is because remember with fixed cost, we're saying that regardless of how much you produce, in total, the cost is gonna stay the same. If you're paying 50,000 for rent, whether you produced 10,000 units or 20,000 units, you're still gonna pay 50,000 in total for rent, right? So I'll say this one is correct, that it's constant within a relevant range, unless if it's step fixed, whereby outside of certain range, it's going to jump to a new cost. And let's go back to the first one. Let me just draw the graph. So fixed cost in total, so this is total cost, this is activity. So let's use rent. Let's say you pay 50,000 rand for rent, and then you can either produce 10,000 or you can produce 20,000. So whether you produce 10,000 or 20,000, in total, the total cost is gonna stay constant, right? The total cost is gonna stay constant, which is B, which is correct. However, you realize that the per unit cost changes, right? Because if you produce 10,000, produced, what's the unit cost? What's the unit cost? To get the unit cost for this rent, which is 50,000, you can say 50,000 divided by 10,000 units. And that will give you, I think it's 5. It's 5 rand. Is it? Yeah, it's 5 rand. So here you see that if you produce 10,000 units, the cost per unit in terms of this fixed cost, which is rent, is going to be 5 rand. However, if you produce 20k units, you have 50k divided by 20k. You realize that now it's going to cost you 2 rand 50 cents for you to produce per unit, or if we calculate the per unit cost for this fixed cost, which is rent, is going to be 2.5. So the idea here is with the fixed cost, it stays constant in total regardless of how many units you produced or what activity you're sitting at. However, the per unit drops because the more you produce, the more the per unit cost drops, right? So that's the idea behind it, to say with fixed cost, the per unit drops the more you produce. So it's always advisable from a fixed cost perspective to produce more, because your cost per unit will drop with each additional unit that you produce. However, the total cost stays the same, because regardless of how much you produce, the total cost that you pay is going to stay the same. But the fixed cost keeps on dropping, right? Because your denominator here will be increasing, and when the denominator is increasing, the cost per unit drops. And number 3, it says it's uncontrollable. Well, that's wrong, because we can control it, right? We can negotiate the rent, or it doesn't fluctuate a lot. So fixed costs don't fluctuate a lot, therefore they're controllable. Unaffected by inflation, this is also wrong, because all the costs are affected by inflation, whether it's rent, whether it's direct material, whatever it is. Inflation is just a general increase in prices in the economy, right? So every cost is affected by inflation. So the second one, it says which is not a production overhead, right? Remember, production overheads are factory costs other than or which are not direct material or direct direct labor, right? So those are factory overheads. So factory rent is a factory cost which is not direct material and direct labor. Therefore, it is a production overhead. Remember, we're looking for something that's not a production overhead, meaning that we're looking for something that is direct material, direct labor, or it's a period cost, right? Because we're looking for something that's not a production overhead. And remember, we said we have, if I go back here, we have direct material, we have direct labor, manufacturing overheads, and number 4 with period cost. So in this case, if we're looking for something that's not a manufacturing overhead, means that we're looking for something that's direct labor, direct material, and period cost. So let's go. So in this case, we're saying factory rent, that's a manufacturing overhead. Therefore, this is not the correct answer. Factory manager's salary, this is also a factory cost that is not direct labor or direct material. Therefore, it is a production overhead. And we're not looking for production overheads. We're looking for something that is not a production overhead. And wood is direct material, because it's a factory cost that it's a material that's directly traceable or physically traceable to the product itself. So this is a direct, so the correct answer is this one, because this is direct material, and direct material is not a production overhead. And then we go to factory security. Factory security is also a production overhead, so we're not looking for this one. And it's a production overhead because factory security is a factory cost. However, it's not direct material or direct labor. Therefore, it is a production overhead. And let's go to the last exercise, right? Last interesting exercise. So in this case, we have a company, Brightwood, which produces 1,000 desks, right? And they give you a number of costs. And then they say you must identify for each of the costs above, you must identify behavior of each cost. You must identify classification, whether it's direct material, direct labor, manufacturing overhead, or period cost. And you must calculate total cost. So I really want you to pause, attempt this, and then we'll work through it together. So welcome back. Now let's work through this example together. So we know that their activity currently is they produce 1,000 desks, right? That's how much they produce. And let's start with the first one, wood per desk. Identify behavior of each. Wood, we know that it's direct material, right? Here is direct material. So wood is direct material, and it's a variable cost. It's a variable cost. Why? Because the more we produce, the more wood we need. Therefore, the cost is directly proportional to the activity. So if we don't produce anything, we don't need any wood. But if we produce more, we need more wood. So this is a variable cost. So if I were to calculate the total cost for this one, I'll say the total cost is equal to, if the cost per desk is 500, that means if I produce 1,000 desks, I'll need to spend That's gonna be how many zero? 1, 2, 3. I think it's 500,000. 500,000. Why? Because the more I produce, the more the cost increases. This is a variable cost. And then we have labor per desk. So this is direct labor. Direct labor, because these are people that produce the desk themselves. They physically work on producing the desk. And this will also be a variable cost, because the more desks that we produce, the more hours or the more work that the employees, laborers have to put in. Therefore, the cost will increase with the number of units that we produce. So the total cost will also be 300 rand times 1,000 desk, and that's going to be 300,000. And then we move on to factory rent. So factory rent is not a direct material, it's not direct labor. However, it's still a factory cost. Therefore, it's manufacturing overhead, right? Manufacturing overhead. This is a manufacturing overhead. Manufacturing overhead. However, factory rent is fixed because they tell you that it's 100,000, not per desk, not for whatever. It's just 100,000, which is a fixed cost. Meaning, regardless of how much we produce, we're still going to incur 100,000 in total for factory rent. Therefore, the total cost is going to be 100,000, because regardless of how many units we produce, we're still going to have to pay 100,000. And then we have supervisor salary. Same thing with supervisor salary. This is not direct labor because the supervisor doesn't physically produce the goods. Therefore, this is going to be a fixed cost. However, it's also going to be a manufacturing overhead because it's not direct material or direct labor. Therefore, it's going to be manufacturing overhead, and it's going to be a fixed cost. So I'm answering these 3 questions here. I'm just putting them in whatever order that I'm thinking about it. So the total cost is going to be 40,000 as well, because this is a fixed cost and it doesn't change. And then regardless of how many we produce, it doesn't change. And then we have lastly electricity. So electricity, they say you always need to pay 20,000 fixed, and then there's a 50,000 charge per desk that you produce. So here we have some sort of a mixed cost. So this is a mixed cost. This is a mixed cost. Why is it a mixed cost? Because we have a fixed component and a variable component that's dependent on how many units that we produce, right? So this is a mixed cost. And in terms of, so this is behavior, mixed cost. And electricity is not direct material, it's not direct labor, but it's still something that we use in the factory. So we need to assume that this electricity that's used by the factory. So that's going to be manufacturing, a manufacturing overhead. Manufacturing overhead. However, when I'm calculating the total cost now, I know that I always need to pay 20,000 fixed plus the variable component. So the variable component will be the 50 rand I pay for every desk I produce. So if I produced 1,000 desks, it's going to be, so I produced 1,000 desks, it's going to be 20,000, which is the fixed component, plus 50,000, which is the variable component, right? The 50 rand for each desk that I produce. And then in total, that's going to be 70,000. So that will be the total cost. And if you haven't watched the previous video whereby I break down the formula on how to calculate mixed cost, make sure that you watch it as well. But this is how it's going to work. So make sure that if there's anything that's unclear, you drop it in the comment section and we can deal with it together. So here I just left space to do the solution, but I've already done it up here. So make sure that you go through this section slowly. If there's something you don't understand, you make sure that you rewind and you do it again. And lesson summary. So basically what we reinforced is what makes up a product cost. And we said what makes up a product cost is direct material plus direct labor plus manufacturing overhead, right? Those are the 3 things that make up a product cost. How costs behave, we really focused on your variable cost, your fixed cost. Let me not use a plus because this is fixed cost. And then we have step fixed cost, and then we had your mixed cost. So that's how costs usually behave. I know there are other 2 cost behaviors, but these 4 are the ones that you really need to understand and master. how to classify costs properly, and we spoke about how to classify costs properly as whether direct material, direct labor, manufacturing overhead, or period cost, right, which is the opposite of product cost. So make sure that you like this video, you follow us, and if you need more support from us, make sure that you use the number that's on our bio or the link that's on the description of this video, and then we'll be able to assist you in Genius